it's Carl Lishing, an independent insurance agent in Lakewood, Ohio. Today we're going to discuss how supplemental health insurance can work alongside and complement individual health insurance plans that people have to buy on their own. The deductibles and out-of-pocket spending limits on individual health insurance plans that are ACA compliant keep getting higher and higher and higher year after year. So consumers are left with more and more out-of-pocket expenses. For many people, they're struggling to be able to afford it. So supplemental insurance can be a good option to help balance some of that stuff out. So with ACA compliant health plans, there's really three different levels. You got bronze, silver, and gold. And it's all about actuarial values. So at a bronze level plan, they have to be actuarially equivalent to cover 60% of their claims costs with an out-of-pocket spending limit no more than a certain amount. Silver level plans, 70% actuarially equivalent up to a certain amount, and gold level plans, 80% actuarially equivalent up to that certain amount. Now let's talk a little bit about that certain amount. If somebody enrolls in what's called an HSA qualified health plan, that's going to be a higher deductible health plan where, other than preventative care, the member's paying everything up to that deductible. Now, some of them, once they hit that deductible, it's 100%. Some of them might have co-insurance or co-pays after the deductible, but under the deductible, the member's paying for everything on an HSA qualified health plan. Now, the maximum out-of-pocket, the high-end limit on an HSA qualified health plan, it can be as high as $8,050 in the year 2024. Some plans have it lower than that, but that's the high-end limit for an individual, one person. Now, for a family, the maximum out-of-pocket, if you have two or more insured people, it's twice that amount. So it can go to $16,100 if two or more people in the same year hit their max out-of-pocket. It's not likely that that happens, but it can. The other kind of health insurance are what I call copay plans. So there's some things where you don't have to meet your deductible first, like your primary care doctors, sometimes a specialist, and urgent care, certain prescriptions, usually generics that are not expensive, mental health and counseling. There might be a small copay that you pay before the deductible. And then the deductible is going to apply for all the other covered services, like a hospital stay, diagnostic testing, outpatient surgery, durable medical equipment, physical, occupational speech therapy, really pretty much everything else. So the copay is what the member pays when they go to their doctor's office. But then there's going to be other stuff going along with it, like there's usually blood work, testing, things of that nature, and that's usually all subject to the deductible. So with individual plans, the max out of pocket on copay plans can be as high as $9,450 in the year 2024. For a family, it's twice that amount. It can go to $18,900. So these are not small numbers. And a lot of people are struggling to be able to afford it if they have a bad year and hit their maximum out of pocket. So let's talk a little bit about things that can be done to help address that with supplemental insurance. Now, when we're looking at premiums that people pay, bronze, silver, gold, bronze level plans are going to be lower premiums, tend to have a little bit higher deductibles. Silver level, higher premiums, a little bit lower deductibles. Gold level, even higher premiums, and sometimes people look at those and are like, oh my goodness, I can't afford that. And a little bit lower deductibles. But the funny thing is that max out of pocket on all of these plans, I can't say all of them, but a lot of them push, whether it's bronze, silver, gold, that high-end limit, it's the same. Those numbers that I've talked about before in a lot of cases. There are some exceptions to it. So it's just kind of the stuff underneath that maximum out of pocket on how the coverage is going to work. But if there's a bigger claim, people tend to get to that maximum out of pocket one way or the other. Now, with supplemental insurance, there's kind of like three main ones. There's accident insurance. And accident insurance plans, there's some variations on it. They can pay lump sum benefits, all like up front, like a chunk of money for a qualifying event, or a certain thing happens that pays a chunk of money. There's other kinds of accidents plans that are based on the incurred expenses that the member has. So if but they'll pay up to a certain amount. So let's say the high end limit is 10,000 and they've got billed charges at 5,000 or incurred expenses. It'll reimburse up to that 5,000 dollar for dollar, as opposed to more of like a line item scheduled payout on the first kind of product that I mentioned. I kind of like those a little bit more because they pay based on incurred expenses. The other kind of policy that is what's called critical illness. Now, critical illness, what it does is if one of the dreaded diseases happens, there's a list of them, and they can vary a little bit by carrier and product by product, but most of them cover the big things: cancer, heart attack, stroke, organ failure, kidney transplants, things of that nature, benign brain tumors in some cases. The list can go on. Now, what critical illness insurance does is if there's a qualifying event that happens, it pays chunks of money directly to the member, usually 5,000, 10,000, 15,000, 20,000. It can go as high as 100 grand. So that's money that can come in to help balance out deductibles and those out-of-pocket spending limits. But then there could be other things going around in that person's life at that same time. If they're dealing with a critical illness, they could have lost wages, like time out of work. So they might want to consider increasing a critical illness benefit from 10,000 maybe to a higher amount, so they got some extra funds there to help at a time of need to cover ongoing living expenses like rent, mortgage, utility bills. We got to eat, we got to feed ourselves. Those kind of things that health insurance doesn't cover. So it can be designed to help cover deductibles, but also give a little bit of cushion for extra things. Same thing with the accident coverage. That can do something similar if you go with higher benefit amounts. But those two kind of products, they are specific to accidents and critical illness. Another kind of product is what's called hospital indemnity. Now, what hospital indemnity insurance does is that can be designed in a way, if somebody's in the hospital, it pays out a lump sum cash piece of money. If they have like an outpatient surgical procedure, it can pay out money to the member to help balance out deductibles. Things specific to more your medical insurance, outpatient surgeries, hospital stays, major diagnostic tests. Because like on those copay plans that I mentioned, a lot of times people, they don't have to meet their deductibles, but if they have a major diagnostic test like a CAT scan or an MRI, that could be $1,000, $2,000, sometimes more, and then that's subject to their deductible. So when the bigger things start to happen, hospital indemnity insurance for certain things can pay cash to the member to help balance that out. Price points will vary a little bit. If the person's younger, the pricing is lower. If they're older, the pricing's higher. Sometimes it's questionable, in my opinion, if it's worth it to buy it. For younger people that might not have cash reserves because the premiums are so low, it could be a good option to help with these higher deductibles. If there's people that are in their 50s, like myself, then the pricing can get a little bit higher. And then you start looking at what you're paying for the benefit amounts that you're going to get out of it. I start to question the value of it in that situation. Maybe it might be better to put that money into the cash reserves and build that up and hold on to our own funds and be disciplined with our money. As long as people are disciplined with their money, sometimes it gets spent on other things in life, and then when bad things happen, they don't have it. For people that are in that situation, maybe it might make a little bit more sense to have that buffer there if they don't have cash reserves. But it's going to be a very case-by-case basis based on the individual's person's needs and their financial position. So it's worth a conversation to discuss. Another thing in this category could be short or long-term disability. I put that into the supplemental category as well. And this is designed to pay us cash when we can't go to work. We're sick or injured. And for some people, if they don't go to work, it doesn't matter. They're financially okay. Maybe they have lots of money in cash reserves, or they're born into a family where they were gifted with a trust fund. And that wasn't me. So we sometimes have to ask ourselves that tough question and say, okay, if something happens to me and I'm down, sick or injured, how does that impact my life, my family? And if the income goes away, where's that going to leave us? So for me, as a business owner, self-employed person for 25 plus years, when I asked myself that question, the answer was, you'd be in bad shape. So I made the choice many years ago to invest in long-term disability insurance. There was a point in time in my life where I had a little bit of a scare, and I thought maybe I'd be needing that. Thank God it was a false alarm, but it opened my eyes even more to the importance of that kind of product. And when people are dealing with serious stuff, how does it impact the rest of their life? So supplemental insurance is designed to help smooth those bumps in the road and provide financial resources and cash when people need it the most. So as mentioned, this is a very personal thing, case by case. Some people need it, some people don't. If you're thinking maybe I should talk about this, call us at the number on the website or click the icon to schedule an appointment, and we'll talk through this and address your questions. Thank you for your time today. Bye for now.